This post is entirely journalistic, just going to be putting down my thoughts, my technical analysis on SPY, IWM, and what I think that could mean for AMC. Nacho was posting in Discord about SPY, so this morning I hopped on, did some analysis. Now I just want to put it down on the charts. I've been following an ascending broadening wedge on SPY. Here we are looking at the daily chart, and you can see that the price target for this pattern is actually the beginning of the pattern, and I'm taking it from the low that occurred just as the pattern started, which is at $404. There was a double top that came in here, and there may even be another double top that we need to look out for between the next minor high, and I need to calculate that price target as well, I guess. But what we can see here is that there was a breakout, a pullback, which Bulkowski says to expect, a breakdown, and then some support at that double top price target. The price then rallied back up into the pattern, so annoying, but ultimately came back down after pulling back up, forming a descending scallop and rejecting at the lower trend line of that ascending broadening wedge. And now we see the price is sinking down. I was looking for a new pattern, seeing that the ascending broadening wedge completed, and it's possible that we saw it completed back here. Nonetheless, it was time to start looking for a new pattern, and so what I found was actually something that I saw in AMC recently, which is a right-angled and descending broadening formation, which I have pulled up now. And I thought blue was a good color for this one. I don't know why, I just did. You can see that the last couple of double tops are forming a horizontal level of support and resistance at around $458, and there's a descending trend line through here with 3 touch points, right? And I mean, there's more depending on how you want to count this cluster, but I'm just counting it as one, and whether or not the pattern has had a breakout or not depends on where you want to draw that line. I personally am thinking that we probably need one more solid red day to truly break out, and then once we do see a breakout, we'll likely move straight to the target before bouncing back and attempting a pullback, something like this. This would make the most sense to me. If the market's going to continue down lower, I think it's going to have to come back up and test this 410 level before it does. So I am expecting a move down further, but whether or not the market crashes or not, I'm not going to try to predict, but I think that this is the point from which we're going to see the market really decide which way it goes, and that's going to happen after a reaching of this target and pulling back up into the pattern or not. You can see that implied volatility is starting to rise as the price pushes outward. We do have a descending volume trend, and we have a spike here. So this could be a potential breakout. It's true. You can see the RSI is coming down as the implied volatility is coming up. This looks really bearish. I'm not going to lie, it really does. And that'll give us a price target of $393. Now, in these ascending and broadening formations, we can look for partial rises to cue very bearish breakouts. And here we definitely have something that looks just like that. You can see that the price did come down, formed a doji on lower trend line, popped back up, and now coming back down. This would be a partial rise where the price fails to reach the upper boundary of the pattern, and so I'm going to say that the analysis is pretty bearish. Now, I want to zoom in on this partial rise. I understand I'm talking very quickly, but I'm just trying to get through this as fast as I can. Okay, so yeah, in more detail, you can see that there's a price mirror in here. It occurs right here, right down the middle. You can see that there's twin peaks and valleys there, and I'm watching these price mirrors in AMC, and they've been serving as continuation patterns. So I'm going to open up a new chart drawing here that's going to break down that partial rise a little bit, and I'm going to blow it up. That's pretty good. I just don't want to get the daily lines. Like, yeah, I hate having all these daily lines in there, but whatever, we'll deal with it, I guess. So you can see that there is a downtrend at play here, and I have that shown in red with these big red arrows. And when I have these really big, bright, bold downtrends in these dashed lines, this is the prevailing trend. And we've had a couple of different downtrends starting in here, and a couple of corrected trends as well. So this trend particularly is an internal trend line. That's why it's solid, not dashed. And you can see that there was a bottoming pattern through here. Looks like an inverted head and shoulders that popped the price back up above that trend line and then led it to test that downtrend. Ultimately, it failed, and we had a new downtrend form. And at the bottom of this move, we had bullish divergence in the RSI, and it really doesn't show up on the 15-minute time frame. Sorry for the system noise. Let me go out here really quickly and just click around a little bit. 1 hour, okay. This is where this chart looks the best, I think. Yes. So here you go. You can see that the price came down, boom, 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 and the RSI had a bullish divergence where the RSI dropped really low, came back above, and then formed a higher low as the price set a lower low. I show that in the orange here, and the lows of the price and the lows in the RSI. Now, this price mirror occurs right here. And you can see that there has been what appears to be, this could be a descending scallop. It could be a measured move down. It doesn't really matter what you think it is. It could be a potentially failed double bottom or a failed complex inverted head and shoulders. Doesn't matter to me. What I see is a price mirror serving as continuation, and I chose to look at this as a measured move down. I pulled a Fibonacci retracement from the last minor high down to the bottom of that bullish divergence price low, and what I got was a 70% and 61.8% retracement that has proven to serve as the reversal point. And if we do get a full second leg from in this measured move down, the price target is going to be down at 397, and the 161.8% extension is 393. So I'm going to go ahead and turn on my other chart drawing here. You're going to see that the targets are in the same spot. So this tells me that the analysis is actually pretty good. There's probably a high likelihood we are going to go down at least this low. And it wouldn't surprise me if we do come down and bounce, and then we'll see if the market rallies or goes down. It really just depends on what the Fed decides to do or what they announce that they're going to do. I did see an article that Warren Buffett was spending some of his cash investing, and that might sound bullish, but he made a big bet in, or he bought a bunch of Chevron. And I don't think moving into energy or utility or consumer staples is necessarily bullish. That sounds like setting up for a bear market, really. So I just know there's a lot of talk about bear markets, the market crashing, blah, blah, blah. I'm not going to try to predict that, but I am going to put this analysis out there and say this is what I see shaping up, and if it does carry out this way, that would make a lot of sense to me. So moving on, I want to talk about IWM, because this actually does affect the price of AMC, and we do appear to be in a big measured move down, and here we go, setting new lows. It's just nasty, right? EEP. I mean, EEP. I don't have a price target here. I haven't looked at this chart very much, but it's just easy to say that it's looking really bearish. Really bearish, especially if this first move is just the first leg of a big measured move down. You can see one here, 1, 2, 3, an ABC correction, and it has like this failed double bottom thing in here, and then we have this corrective trend form up, and this kind of formed this ascending triangle, and I didn't find a price target for that. But I do believe what we are seeing now is a continuation of a downward breakout, and it really could be near a bottom. It really could be near a bottom here. So I'm not exactly sure if the IWM is going to bounce now or continue heading lower. The SPY seems to be set up a little more bearishly. The IWM has been lower and bounced last time it was at this level, so we need at least one more day to really confirm whether or not we're going to see a bullish reversal or a bearish continuation. It's just too tough to say here on this chart, but SPY is looking more bearish than IWM in my opinion. It is possible that this is a big bear flag too. I mean, it wouldn't be a big bear flag, you know, it can't be a flag. Maybe it's in a rectangle. And if it isn't a rectangle, it could reverse and pop up higher, and that would be surprising, right? There's some important support resistance down towards 170. Maybe we see the price fall down here before we see the bounce to mirror the SPY. And what does this mean for AMC? Well, I think in terms of AMC, broader market movement could really throw this thing down. If SPY and IWM both, you know, fall, the fall before they bounce could bring the price back down to 1290, just tearing through this pink zone. Getting through this pink zone is going to be a big deal, and if the price moves through here, I'm going to be placing trades that will make a lot of money when that happens. So perhaps what I'll be doing is I'll putting money on the 1350 strike, and for a couple of weeks out, I'll probably take some of the profits that I secured last week for that. I don't want to risk any new money, of course, but yeah, this could be the continuation of this flag that started at $34, continued down here into this blue horizontal rectangle, and then we've had this breakout, attempt to pull back, and rejection. So here we are, looking very bearish in AMC, and it's just vulnerable to a big market dump. So if that market dump does shape out, I'm going to be ready to go with puts and make money on that dip, and then flip and ride the bounce. Those are my thoughts moving into next week. We'll see what that turns out. I do know that there's a Fed meeting and they're going to raise rates probably, or announce they're going to raise rates. It's just all up in the air. Nonetheless, I'm going to be nimble, quick, and rely on my technical analysis.